Thursday morning session, a day after the 4th of July, and we are still seeing a lull in markets, but we got some big data tomorrow. Let's talk about it here at Capital Markets. Traders, guys, welcome back to Capital Markets. It's your host, Cleveland Bishop. Hope you guys are having an amazing Thursday. Yesterday, U.S. markets were closed, but we're hoping to see a pickup in markets starting this afternoon, okay? So, guys, look, if you guys ever have any questions, please like and subscribe here to the channel so you can be updated on all of the future content segments that we're going to be pushing out. We got one coming out to you guys tomorrow as well. So, yesterday, 4th of July, we saw markets at a very, very, very minimum in terms of volatility. The U.S. market, again, was stagnant throughout the entire global market session. So if you look at any of the U.S. crosses, you don't see too much market activity. Yet, we did see some data releases. We had a German PMI that came out a little bit above target. That actually added to a little bit of volatility that we saw over there on that Euro USD, but still not too much data. But on Tuesday, what we did see was some retail sales numbers and some trade balance numbers. Retail sales for the Australian dollar came in slightly above the expected. Expected was 0.3. They ended up hitting off at 0.4. And retail sales has been one of the main laggers in the Australian economy. Retail sales, by the way, accounts for 66% of all GDP across most of the G10. That's 2/3 of all productivity happening in an entire economy. So it's a very, very important number. And that number came out positive for the Australian dollar. So is this going to lead the Australian dollar to potentially seeing an increase in inflation? We'll keep a lookout and we'll see what happens next week in regards to that currency. Going on over into tomorrow's session, guys, we have a lot of data coming out, right? This is going to be our NFP. This is going to be our unemployment claims. We get average hourly earnings, and we also are going to see a tremendous amount of data coming out for the Canadian dollar as well, right? So this is what the markets have been anticipating. If there was going to be a price move this week, this is where it's coming from, all right? And so we have seen that NFP has been somewhat up and down in regards to its expected outcome. Sometimes we'll beat expectations, sometimes we'll be right behind expectations, and I'm just talking about in 2018. Even though we have just hit the 2% inflationary target that the Fed has been looking for, still those productivity numbers are very, very random. And on many occasions, it's hard to speculate on exactly what the number is going to be. Inflation is the best guess we have, and inflation has been something that we've expected to tick higher throughout the year, and we've actually seen it follow through. All right. Now, when it comes to unemployment claims, remember, folks, we are at record lows. 3.8% has been the record low unemployment number. We haven't seen that number since 2001, right before the massive tech crash that happened when the bubbles bursted and all the different little tech companies, Yahoo, Google, all the crazy sprouting of the internet businesses started to collapse. And then before then, the 1960s. OK, so we're going to keep an eye out on what the unemployment claims numbers look like and what the jobless rate is. Those numbers are going to also be coming out. What many market participants are expecting, they're expecting to see markets stay the same. They don't want to see too much of an increase in that number to maybe 3.7 or 3.6%. Then the market would start to be a little bit weird. Once markets start to become super unemployed, right, then it starts to have a rippling effect in the job market, in the actual businesses that are trying to hire people. If people cannot hire qualified workers, then guess what? There's massive implications in regards to the output and the productivity that can happen in the entire global market economy as a whole. So a very, very tight labor market can actually be bad for some businesses and some economies. And so, again, we're going to keep an eye out on it. Usually we never break below that 3.8. And also, here's a quick screenshot. Every time we've hit 3.8 in the past, from 2001 to 1996, we've always seen markets turn around and a recession resume. Is that going to be the case today? Usually we don't stay at these lows for very long, maybe a year or 2 years, 3 years max. We start to see markets start to pull back. And I'm talking about that S&P 500. And I'm talking about the market turning into a recession overall. So that's something that we also have to keep an eye on. Markets can't hang out these highs forever. Eventually, there's going to have to be a pullback. So let's keep an eye out what happens on the markets for this Friday session, guys. I hope you guys are enjoying the content. And again, make sure you guys stay subscribed for the future content that we're going to be pushing out there on the channel. And as you guys should know, Capital Markets, we're one of the top brokers in the entire industry. Okay, we route from some of the best liquidity providers, meaning that you're going to be getting filled instantly. Okay. today, and all the trades that are transacting through our broker are coming from the real live interbank market. That's a really big deal when you're working with the big broker. And then outside of that, we also have some of the tightest spreads, meaning that you're going to be paying less and less per trade. So if you start playing with those exotics and those different crosses, then guess what, folks? You're going to be saving money. Those pairs can cost a lot of money on some of those other brokers, right? So head over to capital-markets.com. If you want tighter spreads, if you want to get filled instantly, we're here for you. Start your account today. I'm Cleveland Bishop. I'll talk to you guys tomorrow.